Coming up on Market to Market. Nebraska regulators greenlight the remaining Keystone Pipeline route, just days after a major spill in South Dakota. And turning garbage into gold, finding new uses for food waste. Those stories and market analysis with Don Roose next.
What percentage watch it technically?
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, November 22 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Where you spend this Thanksgiving holiday weekend may be different by Christmas, as more Americans are changing addresses. Sales of existing homes rose 2% in October. Would-be buyers are struggling to find listings and paying higher prices in a demand-driven market. Orders for long-lasting manufactured goods fell last month, posting the biggest drop in more than a year. Sales of the volatile commercial aircraft sector throttled the level by 1.2%. Equipment manufacturer John Deere is seeing lots of green this fiscal year. The Moline, Illinois-based company reported annual profits of $2.16 billion, beating Wall Street expectations. Crude oil has spent much of the last 5 months moving higher on news of OPEC production fluctuations and instability in the region. That has North American oil companies looking to expand market share and footprint. This week, the long ballyhooed Keystone XL pipeline took a major step toward its completion of its U.S. route, while the company also dealt with a leak in the High Plains. Paul Yeager reports.
The 5-member Nebraska Public Service Commission approved the Keystone Mainline alternative route, but not without some dissent.
I'm going to be voting no on this application for the following reasons. 1, the route violates the due process of landowners. There are at least 40 landowners along the approved route who may not even know that their land is in this pipeline's path. Since they may not know that they are in the path of the pipeline, they may not have participated in this proceeding and may not have had an opportunity to make a case before this commission.
Crystal Rhodes and another member voted against the request by TransCanada to clear the last major regulatory hurdle across Nebraska. The measure passed by a 3-2 voice vote. The $8 billion, 1,179-mile-long pipeline would deliver oil from Alberta, Canada, to Texas Gulf Coast refineries. President Obama had rejected the project in 2015, citing concerns about carbon pollution. President Trump revived the plan in March and approved a permit. The new pipeline, if the company proceeds, is expected to carry 830,000 barrels of oil a day. The discovery late last week of a 210,000-gallon oil leak from the Keystone Pipeline in Marshall County, South Dakota, would seem to have been poor timing for the vote in Nebraska. However, a Cornhusker state law passed in 2011 prevents the commission from factoring pipeline safety or the possibility of leaks into its decisions, as those events are deemed federal safety issues. Additional crews were sent to the location of the spill in northeastern South Dakota. Officials with TransCanada Corporation say about 150 people have been on site to deal with the cleanup, as well as protecting nearby bodies of water and drinking water systems. Some landowners were skeptical about the quality of work when the pipeline was installed, and this incident hasn't changed their minds, including those in the conservation and family agriculture group Dakota Rural Action.
Well, it's like the other shoe dropping. We were told by a lot of people when TransCanada put this thing in the ground that the conditions, it was sloppy, wet conditions, and they just drove it in because in a hurry, you know, time is money, and we were very, very hesitant about what was going to happen.
This latest incident is one of the 20 largest onshore petroleum spills since 2010, according to the U.S. Department of Transportation. U.S. DOT records show 17 of those spills have been the same size or larger than the most recent incident. Recovery crews are now clearing tainted soil and conducting safety testing to determine an exact cause of the incident. For Market to Market, I'm Paul Yeager.
Most chefs recommend figuring 1 pound of turkey per guest, but estimates don't always meet expectations and there are usually leftovers. Americans discarded the equivalent of 6 million turkeys last year, according to the Natural Resources Defense Council. Not all food is being wasted and can even be converted into cash, as one Midwest company is discovering. Peter Tubbs reports our cover story.
The Hy-Vee grocery store in Waukee, Iowa, makes fresh salsa by the gallon. Separating the seeds and stems from vegetables generates a lot of food waste, which normally has a single destination, the local landfill. Hy-Vee, which operates 245 grocery stores in 8 Midwestern states, is among several companies seeking alternatives to sending organic waste to landfills. The zero waste goal is a growing trend among businesses and has opened a market opportunity for the recycling company.
We are a company that takes food waste that would normally go into the landfill. It'd be put into a trash dumpster, and instead of going to the trash dumpster, it goes into our orange bins. We pick it up either once or twice a week, depending on the account, and it gets taken down to our site in Eddyville, Iowa, where it's composted.
As the volume of material available for composting increases, the demand for inexpensive compost also is growing. Green RU has targeted their compost for landscaping and residential locations, as well as a soil amendment in agricultural settings. According to Hy-Vee officials, composting is favored by customers and employees instead of sending food waste to a local landfill. A grocery store generates a large amount of waste in nominal terms. Employee participation is a key to diverting appropriate waste into the compostable stream.
That our employees felt very engaged in the whole sustainability effort. They knew the value of diverting to lower the methane that is coming out of the landfill. They understand the importance of lowering your carbon footprint. And to work for an employer that cares about that is important to them. So we know it's more the right thing to do is to maximize our opportunities for landfill diversion.
The grocery industry estimates that 15% of the food that comes into a supermarket will go unsold, which can translate to 30,000 pounds of material into the composting stream each month. Products are routinely pulled from shelves ahead of their sell-by dates. Some of the pulled products are distributed to social service groups and nonprofits that focus on food insecurity.
Our first priority is to get the edible unsellable to consumers who can use it. Once it gets to the point of spoilage, that it's no longer viable for human consumption, then we put that in the landfill diversion.
90% of Hy-Vee stores have a compost stream, which generates 17 million pounds of material each year. Compostable materials are collected in the back of the store in a separate dumpster from the landfill-bound trash. A custom-built service truck from Green RU empties the specialized receptacle several times a week, depending on the volume of waste the store generates. Trucks travel with their own water supply for cleaning the empty dumpsters after each load. More than 200 tons of organic waste a week is blended with ground wood products to achieve a specific mix that encourages the decomposition process. At this 18-acre Green RU facility near Eddyville, Iowa, windrows 700 feet long are slowly turned to aerate the organic material. Some compost recipes can become finished product in as little as 8 weeks, while others require 12 to 14 weeks to finish. Food waste is valuable to the chemistry of composting, with its high nitrogen and moisture content. The nitrogen and water speed the decomposition process. As decomposition proceeds, the carbon to nitrogen ratio shifts from 30 to 1 to the 15 to 1 range. which is valuable for both agricultural and residential consumers. While demand for finished compost is important, Hy-Vee officials are always seeking a competitive rate compared to sending everything to the landfill. Cost neutrality may be a long-term advantage produced by GreenRU. The company essentially bids for different types of compostable waste using a sliding fee scale. Some waste streams are more valuable to GreenRU for what the stream brings to the composting process. As landfill tipping fees increase over time, the composting option may make more and more economic sense. Slowing the volume of waste destined for landfills means lower garbage costs for homes and businesses, and fewer acres of rural America devoted to the burying of trash. For Hy-Vee, reducing the waste stream also involves bringing to market what otherwise would be thrown away. Robinson Fresh, one of the largest food distributors in the country, has introduced a line of produce branded Misfits,
where all of the cosmetically challenged fruits and vegetables, which typically are discarded into landfills, are rescued and are repackaged and brought to retail operations like Hy-Vee, where we sell these misfit produce at a discount. And it's a program that is done very, very well, and it resonates extremely well with the consumers.
The Misfit line of produce is discounted at least 30% compared to the visually perfect fruits and vegetables sold in the rest of the produce department. Hy-Vee sells an average of 250,000 pounds per month of produce that would have otherwise been sent to a Minnesota landfill.
We know that the consumer, this is important to a lot of the consumers, and so that's why it's important that we continue to build on this and promote this program so that 1.5 million pounds becomes 5 million pounds next year.
A 5 million pound reduction in the produce waste stream by consumers looking for a deal. For Market to Market, I'm Peter Tubbs.
Next, the Market to Market Report.
We're producing this episode of Market to Market on Wednesday to allow those who bring you this program each week a chance to spend Thanksgiving with family and friends. For the week, December wheat improved a nickel, while the nearby corn contract gained 2 cents. Bean oil lifted the soy complex as January soybean contract added 7 cents. January meal expanded $6.70 per ton. March cotton increased $1.79 per hundredweight. Over in the dairy parlor, December Class 3 milk futures reversed course and thickened 15 cents. The livestock complex stopped bleeding to turn positive as the February cattle contract gained 80 cents and nearby feeders strengthened $1. The December lean hog contract moved higher, 202. The U.S. dollar index fell 44 points. January crude oil flirted with $60, finishing at $1.31 per barrel higher. COMEX gold declined $4.30 per ounce, and the Goldman Sachs Commodity Index rose 3 points to close Wednesday at 428.60. Here now to lend us his insight on these and other trends is one of our regular market analysts, Don Roose. Don, welcome back.
Thank you, Mike.
In case you want to go over things again, you can download or listen to our Market Analysis and Market Plus podcast anytime online at iptv.org/MTOM. Don, I want to talk about this wheat market. Not a whole lot happened here for the first 3 days of the week, but we had an interesting rumor circulating in wheat. Radioactivity was found apparently in some portion of Russia's wheat crop. What was the story on that? Did you follow it?
Well, you know, and it did give a little bit of support to the market, I think, more artificial than anything else. And I think everybody remembers the Chernobyl time frame in the 80s when we had the cloud nuclear contamination go over and cause a real push up to the upside of the market. So I think it was more just selling stopped. And from what we pick up, it was nothing from a nuclear facility or anything like that, but it was picked up, and it was picked up as a rumor.
But it's not anything that's going to get these long-time wheat shorts to get out of the market and start buying.
No, I don't think that has anything to do with it, really. But, you know, we are looking for a catalyst, though. What could change the direction of the market? Because really where we're at, Mike, is the markets kind of ran out of negative news. And if you really look at the market, we've just kind of stalled out at the bottom. We've been down at the bottom of the range in wheat for a month. There's not a catalyst to push us up, but it feels like we're just trying to mark time, and we do have some issues with some dry conditions down in the southern plains, and it's a La Nina year, so we'll see. Really, to move us off at dead center is probably going to take some weather problems someplace, but meantime, what we're trying to do is expand trade down here and increase domestic consumption.
All right, for producers who know they've got wheat in the ground, I mean, we're not really looking at very positive levels, even as you get out into the spring. Any advice to get some sales in here, or do you just hold off, let us tread water until a catalyst happens?
Well, and we have been treading water, but I think the problem with is very similar to all these grain markets. While you're treading water, you need to protect the carries in the market. For example, you have Deese wheat at $4.22, but then you have May wheat at $4.53. So you have a carrying charge. You want to make sure that you protect that somehow. You can do some floor contracts in a lot of these grains so that you get the upside and at least you don't lose the carry in the market. You know, $4.22 is bad, but if you have to take that in May, that's even worse.
Right. Well, now let's take a look at the corn market, and you kind of led us right into it. I want to start here with a question from one of our followers on Twitter. This is from Will in Jasper County, Iowa. Will Cannon 64 sent this in. He says, last year I waited for higher board prices after harvest and the carry in cash prices eroded. This year, how can I capture the carry and give myself opportunities to market later on higher prices from the board? He wants to have his cake and eat it too. Don, how can we do that with the marketing tools we have?
Well, you can do it, and it's a good question. And I think the number one thing, what I would advise him to do is buy 390 July corn puts. That locks in the carry at 390. We're 370, 3.5 on July corn now. And then sell you can stop there. That's about 30 cents. Or you can say we're going to keep treading water, and you can sell a 350 put against it. So if you look at it, you have 40 cents downside protection. It protects you from a price erosion and also a carrying charge erosion, and it gives you all the upside. So you, like you say, you can have your both a winner and a loser going that way.
Because he still has his physical grain in the bin.
He still has his physical cash corn. He's protecting the carries, protecting the downside, and he has the cash that he can still go look at a basis improvement and have a lot of flexibility.
All right. Now, looking at a little bit longer term, would that be just good advice for everybody sitting on more yield than they anticipated coming out of harvest?
I think it would. And I think when you really look at it, Mike, there are opportunities in the market. There's no doubt about it. Last year, December corn went to 417.5. And right now we've got corn, Deese corn just under 390. So you can buy some insurance policy the same way. You can buy a 390 put, sell a 350 put there also. But
in December 18.
In December 18. But you even look at opportunities in December 19, we're at 410. And you look at December 20, we're at 410. And you put a 30-cent carry on that, you're out into 440, and you pull your basis off of that, and there's some opportunities in the marketplace. I think some of the premium is anticipation that maybe we're going to have some weather problems with La Nina perking his head up, but there are opportunities. You just have to make sure that you merchandise your way out of this market versus taking a chance on the market at flat price.
Now, we've talked about La Nina a couple times. As we get into the soybean conversation, Don, tell us if La Nina continues to intensify, what is expected in South America?
Yeah, when you look at La Nina, you know, first of all, it is gaining some momentum. In fact, the Australian Meteorology Bureau this week also put out a La Nina warning, a threat, through February. And they say there's a 70% chance that the odds will continue on the La Nina path. So what's that mean? What that means is that we're supposed to have, the odds favor, a dry southern half of the United States. Argentina turns drier and warmer in southern Brazil. So those are some key areas in big producing areas. So that, I think, is why we're adding a bit of risk premium to the market. And NOAA's saying that, and some of these other meteorologists around the world are saying the same thing.
Now, we have started to see soybeans turn around a little bit. Last Friday was a kind of a banner day, 18 cents to the upside. So far this week, we've moved about 6 cents to the upside, but at least we're holding in Friday's gains. Is that built on this La Nina expectation, or are there other fundamental factors at play?
Well, you know, Mike, I think it's some of that, but actually this is a seasonal time frame that we usually try to move higher. Soybeans from the middle of November all the way into almost the end of December, we move higher. Same thing on corn from December 2nd all the way into January 7th. Seasonally, we move higher. So you're in a time frame we move up, and you say, well, why is that? Well, because our harvest is behind us. You're trying to pull some of the producers lock the bins. You're trying to pull some grain away from them, and then you're starting to worry about weather issues in South America. And early pollination in Argentina is going to be the middle of December. So you can see, you start a little nervousness right away.
You bet. Now, we did get a comment on Twitter from Chad Engels on Twitter at Hort4Sci, demanded that we cover the cotton market, up $1.79 this week. Don, what's going on?
Well, you know, I think the cotton market is like some of these other markets, but cotton, like no other market, is really dependent on what happens with China. And I think, you know, there's some interest that maybe we're going to have some Chinese business pick up soon. I think it's much like the grain market. We've got the crop kind of tucked away, and we're going to see if we can pull it away from the market. But at the same time, while it's up, there's not a big enthusiasm to the upside. I would say, you know, new crop cotton, you get up around the 72. That's a tough resistance area.
All right. Now let's take a look at the livestock markets. We did have a tough week last week. We saw the cash market really kind of freezing its tracks on Tuesday, dropped all week on the futures. This week so far, we've held steady. What are you expecting here as we get through Thanksgiving and on into December on the live cattle trade? On the live cattle, I think when you look at the cattle, you know, we probably put in our seasonal top on cattle when we pushed up into that. The board went up to 127 on the Dees. We had the cash moved up to a high of 125, 126. Then we pulled all the way back to 118. The beginning of the week, you know, midweek here, we traded 120. We probably try and stabilize, trade $1 higher maybe next week. The thing we have with the cattle market is there's just a lot of supplies that we have to fight through. So I wouldn't get overly bullish. We're going to have 5.1% more cattle in the first quarter. Second quarter, you're going to be up 2.1%. You get into the second quarter next year, you're up 8.2%. So there's no shortage of not only cattle, but of meat. So it's up to the demand. And, you know, that was interesting. Livestock slaughter report came out today. October was a record high month for total red meat and pork production, and yet prices, given that, have stayed in there. Is that just domestic demand really driving it?
It really is. You know, that's if there's a surprise in the meat market so far this year, is that we've literally been able to eat through the big supplies. And I guess when you have to look, when you look at it, is probably some promotions. It's some just the economy's a little bit better. So I think it's a combination of things. But when you look at the cattle, Mike, again, we're in a La Nina year, and going back to that, and that means that the feedlot areas in the South probably are going to have better rate of gains and maybe some tonnage a little bit larger. So that's another concern. A lot of times cattle in the winter, that's a supportive factor because you get into some of these snowstorms, weather issues. So maybe we don't have that this year. We'll see.
All right. Now, given the fact that we have seen some profitability for the cattle feeder, are they just piling that all right back into feeder cattle? And if so, does that make you a little nervous as we get through the fourth quarter into the first quarter of 2018?
When you look at the, you know, there's no doubt, I mean, particularly when you look into the Corn Belt areas, probably paying too much for feeder cattle just because the corn price is probably too low. So trying to figure out how to walk the corn off the market here. So yeah, there's some risk management opportunities out here. There's no doubt. When you look at some of these months, you know, April cattle up at 125, 126 area, certainly hedge risk opportunities. June cattle up around 120. You know, the government, really for the top of all next year, they have cattle in a range of 110 on the low side, 124 on the top side. So we're above them in the futures market right now.
All right. Now let's take a look at the hog market because, again, a lot of strength given the big numbers. You talked about cattle numbers increasing. Do you anticipate the same increase in total pork numbers as we get through fourth quarter and first quarter 2018?
Yeah, there's no shortage of meat. I mean, it's really up to can we actually consume it. That's the thing. In the fourth quarter, we're going to have 4.6% more pork than we did a year ago.
And that's on a per head basis. That's 4.6% more animals.
That's on the slaughter standpoint.
Okay. Okay.
Yep, on the total meat.
Okay.
So weights.
Tonnage.
Tonnage, yeah. And that same thing, Mike, goes all the way into next year. For all of next year, on average, we're going to be up about 4.5%. So look, the price we had this last year, and then are we going to be able to consume more? And then on top of that, we're going to have 1.6% more poultry. So there's a lot of meat, and you're really going to have to consume it, which is the reason, you know, maybe we can keep the domestic consumption up, but that's the reason I'd take a hard look at risk management on rallies, because the fundamentals certainly tell you to implement some risk management, and we're in a supply bear market yet.
How far out would you be looking to manage that risk? Would you be looking all the way out through the end of next year in hogs?
I would. I mean, October hogs are up around $68. The government's forecast right now, you know, we'll get another update, but it's 58 to 63. So you're over the areas that they're forecasting, and we're going to have 4.6% more hogs in that time frame.
All right. Well, Don Roose, thank you so much for taking the time to share your insight.
Thank you, Mike.
That wraps up the broadcast portion of Market to Market. However, we will keep the conversation going, including answering more of your questions during Market Plus, available in podcast and video form on our website. Are you looking for a way to avoid talking politics at the dinner table this holiday weekend? Tell everyone you've subscribed to our channel at youtube.com/market-to-market, and now you watch our features, Market Plus, and other educational videos anytime you want. Join us again next week as we'll revisit the Bakken's highs and lows in the oil business. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.